Shares still skyrocketing over 180% this year. There's no doubt the GPU king will continue its reign, but there's still debate right now. And this is a new narrative for this year, revolving around the time frame of that success. Recent checks show weaker demand for the current GPU, that would be the Hopper iteration, as customers are waiting for the latest Blackwell. That's the next iteration. So, they're not maybe holding off on some of their purchases to wait for the next and greatest. They also have been, there's been back and forth headlines about possible delays for said Blackwell, and then additional China chip restrictions. But investors really, of course, aren't fazed by these concerns.
What's going on, YouTube? My name is Mike. This is Health and Wealth. Thanks for joining me today on December 31st, or as you know it, New Year's Eve, on another edition of the Health and Wealth channel. So thank you so much for being here today. If you enjoy this comment, if you like my face, even if you don't like my face, hit that subscribe button. Totally up to you, but I definitely appreciate you being here. Today I want to discuss my portfolio. I want to discuss, how YieldMax has done with the three positions I have in my portfolio. How's Bitcoin doing? I want to go over a CNBC recording, two of them today that happened that were pretty interesting in regards to Nvidia specifically, which is going to be paying out 2 times in the next 4 weeks. So that's pretty huge. 2 times in the next 31 days, we're going to get Nvidia distribution. So that's pretty awesome. Those are the things I want to discuss. So first things first, I just wanted you guys to know this is my sixth time trying to record this. My computer is giving me issues. I've switched around some ports. So far, so good. Let's see what happens here, all right? So what I've got is my portfolio open up here, and I'm going to get my face out of the way just so you can see it. So there's my Coney position right there. I have 183 shares. This is new. This is the most shares I've ever had of Coney so far. And so the plan with Coney, if you haven't seen my other videos, I'll link them at the end up here, is to set it and forget it. So I've bought 183 shares of Coney, and now I will do nothing more with my own money. I've gone ahead and set drip on, and so it's going to drip. Every time a distribution comes out, it's going to buy shares of Coney. I'm going to leave it here for the next 5 years. I got a couple comments like, what about NAV erosion? What about reverse splits? Yes, all of this stuff can happen to this Coney, but it was roughly 2,000, probably like $2,500 worth of my money in there. And I know I probably shouldn't say this, but I don't care what happens to it. I hope that that price stops going down, right? My average share price is $16.38, and right now it's at $13.04. It's been really bad over the last 5 days here with the, Bitcoin coming, hovering around the $100,000 mark and then coming back down. But also Coinbase has come down, right? So yeah, it hasn't been good. But for me, I have such a small amount of my own money in here that I'm willing to risk it for the biscuit. And we're going to see if I can, snowball this, increase shares over the next 5 years. And my original analysis was from one of the websites that we peruse from time to time, that it would end up paying me about $1,500 a month with no additional money coming out of my bank account into this fund, just from itself buying into itself for the next 5 years. Now that's a good case. Not the best case, not the worst case, but I mean, the worst case that can happen is this thing goes down to $5 or reverse splits, and then it just keeps doing that for the rest of its life until I run out of shares. That's the worst that can happen. Let's hope that doesn't happen. I also have MSTY here, MSTY, everybody's favorite until this week. Again, in my comments, people are saying I've had MSTY. I bought it at 40 and now it's at 26.31. What am I going to do? The house is on fire. Right. So I want to be perfectly clear here. When you invest, you want to invest with money that you are not afraid of losing, right? And if this money goes away, is it going to change your life? And so a lot of people are maybe investing outside of their comfort zone with these ETFs because they see these magical returns. And I mean, it's maybe too good to be true, right? So be cautious with what you invest. With me, I have 133 shares. I plan on buying more. This price, I want to actually just share that with you right now. The price of MSTY over the last year here has been really volatile. And this is the first part of what I want to talk about. So it's got all the way down to $19.07. This was in September of this year. So 4 months ago, we were way down at $19. But then after that, it went all the way up to $44 for a couple of days there. And since then, it's come back down to $26.31. For me, let's take a look at my average cost here is $30.60. So for me, I'm happy. I shouldn't say it like this, but I'm kind of happy if it goes down because I plan on accumulating more and more and more. Personally, I do believe in the Bitcoin. I think Bitcoin will be, as high as it needs to be, but I think it's going to be well higher than what it is right now. It's a long-term play on the Bitcoin, not a short-term play. I do own a little bit of Bitcoin. I've got into it here just 3 pays in a row of putting $100 in. It's nothing crazy at all. Again, investing within my means. And, I'm down so far on those 3 payments into Bitcoin, but that's okay. I see a very strong future for that. And so because Bitcoin, go ahead and put that up there, is down to 93,545. Now, this is US. So is MicroStrategy going up and down like a yo-yo here. If you take a look at the last 6 months, extremely volatile. If you look at the last month, down 23%. Last 5 days here, down 15%. So this is why your MSTY ETF is down as well over the last 5 days. So when people see this, especially when you bought at the top, you start to panic. You start to say, oh, this is a bad investment. Well, think about, this is not advice at all, but think about what you're in it for. Are you in it for the distributions? Are you in it for that share price? For me, I'm in it for both, as you guys know. But we should still see distributions coming out of this. It probably won't be in the $4 range. As this share price goes down, so does the distribution. I could see in the $2 range coming up here. But what are they doing? They're writing synthetic options calls on MicroStrategy's volatility. And if we look at the last month here, it has had some peaks and valleys, which will create that volatility. Michael Saylor says MicroStrategy is the most volatile company out there. And so that creates higher and more generous premiums to pay out in a distribution. So yes, you're still going to get distributions. Will they be as high as $3 and $4? Maybe, but maybe not, especially as the share price goes down here. But that's, depending on how the market's doing. My last position here is my biggest position. It's Nvidia, NVDY. You can see my average price is $27.99. I did, what's the saying? Rob Peter to pay Paul. I took out 64 shares out of this quantity here. And that's how I bought all of this Coney up top. And I think that was a good idea by me. I think NVIDIA is going to be kind of slower over the next month or two here. NVIDIA, sorry, is going to be slower over the next month or two here. But, every single analyst is all over NVIDIA all the time. This is a sleeping giant that has one eye open and ready to pounce. Millions and billions of dollars are being invested in NVIDIA to buy their chips and their AI technology. I think it's the company of now and the future and the future's future. So it's got a long run to go. But for me, I expect slower than usual volatility over the next couple of months. And the reason I expect that is because I listened to the earnings call. They did say that they're expecting profit, but not 100% profit, 30% profit compared to what they had last year. So what does that mean? It lowers the volatility, which means that it lowers the premiums that's going to pay for that volatility. So yes, you will get distributions, but it's probably going to be lower than what it has been in the past. So, 85 cents, could be something that comes out. Now, I actually have the distribution schedule up top here. It looks like Group B, which is going to be the next one. So on the 2nd, 2 days from now, is when they declare the distribution. On the 3rd is the ex-dividend distribution day. So on the 2nd, you have to have your money in. And then if you put your money in on the 3rd, you don't get this distribution, but you'll get the next one 4 weeks from now, which is on the 31st. And then we get paid on the 6th, which is going to be Monday of this next week coming up. If I kind of go all the way down to Group B down below, you can see the next one's January 29th. January 30th is the X dividend or X date. And then on the 31st is the payday. So this is 2 pays within this month coming up, which is really great to see. That happens with YieldMax because they've grouped into 4 separate groups that each ETF will have 13 payments a year. So this is Group B's time right now, which is really cool. I also took a look at how I did this year. I was curious about how I did this year in terms of accumulation and profit and growing of my own fund here. The benchmark is 10%. The S&P 500. They say if you invest in the S&P 500, 10% is a benchmark that you can get every year. That would be good. I'm proud to say that I made 39%, 39.64% actually, to be precise, with minimal amounts of money going in, some money coming out to pay bills earlier on in the year. So I'm really, really happy with that. So I'm really happy. 39%, you can't be too angry about that. That's for sure. So that's how much my percentage I made this year. So again, if I can do 39% next year, I'd be really happy. Of course, I want to be greedy and I want more, but I'm going to invest within my own comfort zone and limits. And I definitely encourage you to do the same thing as well. Quick little run through of all of the ETFs here. Nvidia right now 23.35. I don't know. I need some advice from you guys. What should I buy next? Should I take the Nvidia distribution, put it into MSTY? Because that's where I'm leaning. That's what I'm leaning towards. And I got 2 of those this month, right? And I could put them. So that means I could put 3 payments into MSTY this month. So I could put the 2 Nvidias and the 1 MSTY. That's what I'm leaning towards. Or should I build my Nvidia back to 400 in anticipation for 3, 4, 5, 6 months from now of more juicy premiums? Oof, I don't know. I think I'm leaning towards the MSTY. You tell me what you think. Nvidia itself here, look at the last 6 months up 8%, last month down 3%. So it's just kind of hanging out. But I mean, go look at the news on Nvidia. People are are all over it, right? Nvidia's $65 billion AI boom, the stock that's too big to ignore. Completely agree with that, right? AI is the future. They got the chips, they got the AI, they have it all. Nvidia may be entering a limitless era. A limitless era. Oh my goodness. Everything just sounds too good to be true, right? For Nvidia. Oof. And then, I mean, take a look at the price of Nvidia here. A lot of people are kind of anticipating the $185 range for Nvidia this year. I've seen that number flash a couple times, so 134. And that's another question I get in my comments. Is it better to buy Nvidia or Nvidia? I guess it really depends on what you're looking for. If you want to get a monthly distribution, Nvidia. But if you want total return, I think Nvidia might be a better option out of those 2, right? And so again, I'm not a professional. I'm just some guy in a Leafs hat and a Raptors t-shirt getting ready to party hard tonight. But I don't know. I think Nvidia might be a better option. But for me, I'm not that bright. And so I want to go ahead and get monthly distributions to kind of build my account up and up and up and be able to retire eventually and using those distributions to pay my bills and pay for my retirement. Next up, we have Coney here. Coney has had a rough 5 days, down 7.5% here, or $1. That's a lot for Coney, right? Last month down 22%, which is just not good. 6 months down 38%. So we've got ourselves a roller coaster straight down. If this thing goes any further down that roller coaster, then things to be looking out for is reverse splits, people leaving the fund, maybe, not confident in the fund managers to run it properly. Are they paying too much money out of the distributions and it robs from the NAV, robs from the price of the shares? As the price comes down, are the distributions going to be less? These are all the negatives that you got to think about, right? And so for me, like I said, I don't care. Whatever happens, this happens. It's $2,000 for me. It's not the end of the world. But what I hope is that Bitcoin starts its progression back up here. Coinbase itself also down. If you look at the last month, down 17%. So that kind of contributes to the price of Coney there as well. Now, I mean, if you look at the last 6 months, up 6%. Let's go to Coney again. Down 38%. There is something going on there that is creating that Coney to go down. And I don't know what it is. I'll let you guys assume what it is. But if Coinbase is up 6%, but Coney is down 38%, do you see maybe a problem, YieldMax people? I see a problem. Next up, MSTY, right? Let's just do 6 months, down 7% here. It's because we had that massive spike back in November. Mr. in the last 6 months, up 112%. Pardon me. So that's another one. So, I mean, when I look at that, I see 6 months up 112%, and I look at MSTY down 7%. That's the question people ask. Should I buy the underlying or should I buy the ETF? Clearly, on this one, you should have bought the underlying because you would be in a far greater position. That's for sure. Last thing I wanted to show you before we get to the CNBC videos here. You can see that this was at all-time highs. Bitcoin was at all-time highs of just over $100,000. And over the last, let's go month here. Yeah, 106,000. Last month has come down 3%. So what we'll do, we'll get to the videos. I'll come back and have a chat, and we'll go from there.
Nvidia shares still skyrocketing over 180% this year. There's no doubt the GPU king will continue its reign, but there's still debate right now. And this is a new narrative for this year, revolving around the time frame of that success. Recent checks show weaker demand for the current GPU, that would be the Hopper iteration, as customers are waiting for the latest Blackwell. That's the next iteration. So, they're not maybe holding off on some of their purchases to wait for the next and greatest. They also have been, there's been back and forth headlines about possible delays for said Blackwell, and then additional China chip restrictions. But investors really, of course, aren't fazed by these concerns. A key catalyst will be CES next week, where we'll hear from Jensen Huang, as well as the CFO, Colette Kress, about the future of AI computing and possible financial goals and updates for Blackwell. Nvidia and several other AI winners like Marvell, ARM, Broadcom, chip manufacturer TSMC have all fared well over the year, bringing an average return of over 100%, outpacing that basket of chip names that we talked about, the SMH as well as the SOX. But the rest of the sector hasn't fared as well as those exposed, let's say, to auto and electronics. The PC refresh cycle, we heard from HP not too long ago, saying it's just really a slow start, and it's impacting names like AMD, memory maker Micron. We know their guidance was a lot weaker very recently, just a few weeks ago. Intel, down 60% on the year, one of the worst, I guess 60% of its value lost in 2024, biggest drop in 53 years as a public company.
Terrible.
So
yeah, Intel's got more than its share of issues.
Yes.
And in fact, I would assume it's going to be on your radar. It is for mine as well in 2025. Just, I mean, what's going to happen in terms of leadership there, not to mention in terms of the structure of the company itself. There any number.
Altera, what's going to be spun off? How are they going to split it up? Who's the leader?
Will it be split up in some
Precisely.
fashion? Would you really see the bigger split that certainly people talk and speculate about in terms of manufacturing and design?
And I guess some of the debate, I spoke to an executive, another chip executive, who said that the problem with Intel is they tried to do too much all at once. And then the argument is, well, you had Pat Gelsinger, who came from the chip space, was really well versed in it, and had the drive and the ideas. But unfortunately, that didn't pan out, especially when you saw the loss of capital going into the manufacturing side, and the fact that they fell behind so many other chip makers. Even with their latest, they do have a GPU that's just really not up to par with what's out in the market right now.
You mentioned CES coming up. I mean, NVIDIA several quarters was on this cycle of please just tell us that the next thing is huge and it's going to happen and we can, kind of put it on the horizon. What are we waiting for specifically, if anything, to hear incrementally from Jensen Huang?
It would be Blackwell. So the Blackwell volume.
So it's the one we know we want the timing and
precisely.
Yeah.
That's what's driving the stock in the near term. I know you have talked about it in many ASIC or the custom-made chips will possibly take away this market or change Nvidia's reign in the coming few years. But in the near term, it really rides on what is that next iteration, and not even after Blackwell, it'll be Rubin, right? So will there be any commentary about Rubin? And so it's constantly fueling that fire, right? Like the next thing, best thing is coming. Don't worry, because we're doing at least one new chip a year, right, which makes it so difficult for others to keep up when Nvidia is so far ahead. That's the bull argument,
Blackwell shipping in size right now.
It is already shipping,
right,
yes.
Right now.
You gotta love that, right? If you're a NVIDIA holder or a NVIDIA holder, you gotta love that. They're so far ahead of everybody else that it's hard, right? And all these companies are buying billions and billions of dollars worth of these chips, and the NVIDIA itself can't keep up to that kind of demand. So you gotta love that they've created this moat that nobody else can keep up with. That is just stemming, for a major plus in the future, I'd say. Next, I love this guy, this guy right here. We'll listen to him, and I'll come in and talk to you in a bit.
What happens next year? Do we see this continuation with these mega tech stocks?
We definitely do, but we have to look at this differently. So we're big on AI, but the question is, what are the AI derivatives? So what are the second order, third order derivatives of AI? And so the second order ones are looking at software companies that are taking advantage of AI, because most customers can't build it on their own. They're going to want to consume it. So companies like Salesforce, Adobe, ServiceNow, Nvidia, Palantir, and Oracle are interesting because you're going to be looking at their services revenue much more than before. So, and the other piece that's going to be important is really a Mag 7 rotation. If you're afraid to get into all 7, well, then what you're going to do is move out of Nvidia, Meta, Microsoft, and Apple and go into Amazon, Tesla, and Google and play that for the rest of the year.
Is that what you're advising?
Yes, definitely, if you're thinking about that. But I'm in all 7 of the Mag 7, so that's a different game. But we're also looking at IPO markets, and that's going to be very interesting on the tech side. There are a lot of IPOs coming. You see it on the Databricks side. You see Discord, Klarna. You see Stripe, Chime on the fintech side. They're also going to be big there, so people are going to want to play that game as well going into 2025. The other thing to think about as well is the fact that M&As are going to be on the rise, and a lot of these AI companies are only going to be able to grow by acquiring more data sets, by acquiring more scale, and you're going to see the M&A game for possible acquisitions from the big players in AI.
Okay, so that's an interesting play too. If you get into M&A, look, you got to question whether some of these big tech companies are actually going to be able to get bigger, because even though M&A is expected to rise, big tech may be facing some similar problems coming from a new Trump administration. Where would you focus when it comes to mergers and acquisitions? Where would you think there would be deals that could be done and maybe some room for some of these stocks to move up?
Well, there's an interesting thing that's going on. You're either at $1 trillion of market cap or you don't get to play at scale. And there are a couple companies that are sitting just about 500 billion. You see the Oracles and the Broadcoms, and they used to grow through acquisition. Maybe they're going to be more acquisitive. And then you see another group of tech companies that are sitting at 250 billion. And those are the names like ServiceNow and IBM and Adobe and Salesforce. It would be interesting to see if a banker puts together a play to bring some of this consolidation in the 250 billion market to go compete with the $1 trillion market cap players.
That's really interesting, especially when you mention some names that, like an IBM. You think of them as being the big dominant tech from years ago. Now being at 250 billion makes them an acquisition target.
It could make them an acquisition target, and it depends what the antitrust climate is. But I wouldn't say necessarily that's where they want to go. But there are going to be a lot of companies that could potentially become acquisition targets in vertically integrated markets or to reach out to other areas. Broadcom, for example, has done that better than anyone else. They're known for chips, but they've done a really good job acquiring VMware to get a services revenue. And so companies that are in hardware that don't have services will go in that direction. Companies that are in software that want to get into another area may also make those types of acquisitions.
Ray, very quickly, AI spend has been the mantra. People are finding ways to spend money continually on AI. Will that happen if there's a downturn in the economy?
I think it's only going to accelerate because what we're seeing right now is exponential efficiency. If you're not 10x better or 1/10 the cost, you don't get to play in the market. I'll give you a great example in the financial services space. If you look at ACH transactions, $1.50. If you look at SWIFT, $25. In India, you're basically playing zero cents for peer-to-peer transactions in the government's UPI, which is their peer-to-peer network. If things like this continue, companies that think they have a moat are going to be dismantled. So the SaaS companies that used to disrupt the existing software companies are now too expensive for most companies. So for example, you could buy Salesforce at $400 per user per month, but you could also go to Zoho at $10. And that's the gap we're going to see going forward in the future, that exponential efficiency.
There you go. Thanks, Ray Wong. Listen, guys, that's some food for thought. I think NVIDIA is a way to go in the future. That's just how I feel. That's my opinion. It's just from watching these types of videos, looking at the comments and understanding their earnings a little bit. But, don't trust me. Do your own research. I think it's really important that you dive deep if this is something you're going to put your own money into. For me, I'm putting my money into NVDA, MSTY, and Coney will be its own money going into itself in 2025. Speaking of 2025, it's coming up here, Eastern Canada, in 7 hours from now. So I just wanted to say thank you very much for the previous year here on Health and Wealth. Thank you so much for the members that have subscribed to help support the channel even more, and for your subscription. So again, I just want to end this video by saying thank you for being here. I appreciate every single one of you. Have a wonderful 2025. We'll be talking many times before the end of that. My name is Mike. This channel right here is Health and Wealth. Have a great night.